Initial jobless claims out this morning, folks, saw a surge of 55,000, now 286,000. That's the highest going way back to mid-October of last year. This, as we also witness a significant decline in employment, that component of the Philly Fed manufacturing report, and it speaks to this sort of wage spiral, but only tells maybe a fraction of the story. Joining me now, the Marks Group president, Gene Marks. Gene, you know, there are a number of inputs into this inflation story, and I want to start with you with just the wage part of this. You know, CEOs around the world are citing their top priority is attracting and retaining talent. I think, though, there's a little difference between just simply finding a warm body and then really truly finding talent. And that kind of thing doesn't get fixed overnight, does it?
No, it doesn't, Charles. You know, it is that is what the CEOs are going to tell you and the big companies are telling you. And you're absolutely right. There's no short-term fix to this. But, you know, Charles, I got to tell you what I'm seeing with my own clients and my readers and all around the country is I'm seeing those very same companies make significant investments in technologies because, listen, you know, I know this might sound harsh, but people aren't coming back to work and companies are replacing them with robots. I mean, Boston Dynamics came out with a robot last year called Stretch, which for $75,000 replaces a warehouse worker. And a company called Miso Robotics has a product called Flippy, which flips hamburgers and makes sushi and makes pizza in restaurants, you know, and John Deere is selling self-driving tractors, and Microsoft and Salesforce.com, they're offering AI technology that's literally replacing salespeople and customer service people. I mean, Charles, I went to the Paris Hotel in Las Vegas a few weeks ago. They've replaced their entire check-in staff almost with self-service kiosks for their guests to check in.
Yeah.
So a lot of companies, they're not sitting around and waiting for these workers to come back to work. They're making like significant investments in technology.
Right.
And those workers that want to come back to work may find that there aren't jobs waiting for them.
I've been saying that for over a year, Gene. In fact, a big part of my investment thesis is based on this CapEx tech boom. I see it. It's going to last for a long time. And in the stock market, it's going to be reflected in some major home runs. I think people who are holding out too long could regret it. Let's talk about this piece you published on the producer price inflation problem, because you say even though it's bad now, it's going to go a whole lot higher in the months to come. Why?
Yeah, you know, I mean, I speak to a lot of industry groups around the country, and, you know, we talk about inflation and the producer price index. So the producer price index, Charles, this past month was 9.7%. And when I speak to people in manufacturing, agriculture, construction, these are business owners and managers, they shake their heads because they're seeing prices well above that. I mean, the producer price index is an amalgamation of, like, you know, hundreds of different factors, but really there's a handful of core materials that really goes into the prices of the stuff that we buy. You know, aluminum, Charles, has gone up 37% in this past year. Tin has gone up 116%, iron and steel 87%. And on the farming side of it, the cost of potash, you know, which goes into like fertilizer, that's increased like 92% this year just alone. So my piece in The Hill that I wrote this week, or this past week, was basically saying, like, there's a lot of these core costs and these materials that are way over in price increases than what the PPI is showing. Yeah. Ultimately, that's going to be filtering its way down to consumer prices in the next few months.
Yeah, and to that point, I've got less than a minute to go. In that same Philly Fed report, there was a special question, and it dovetails perfectly to what you were talking. They were asking, you know, what are you going to spend the most money on over the next year? Raw material costs beat out everything. It came in higher than energy. It came in higher than wages. And then the other part that caught my eye, prices paid went up, prices received went down. So that means no matter what, a lot of companies are looking at smaller profit margins, bottom line, right?
I don't think it's going to continue. I think what we're going to be seeing is a lot of companies, particularly if they're well-managed companies, are ultimately going to be passing down those price increases to their customers. They have no choice. They have shareholders and they have profit levels they have to maintain.
On how much you can raise your prices?
Depends on what the market's going to bear, Charles. I mean, again, if prices are going up industry-wide among certain companies, then they're going up. Yeah. And you've got to maintain certain price. I mean, yeah, this will have a price pressure on certain profits, but I am telling you, you know, it's not going to be a corporate issue. It's not an equities issue. It's just going to be a pricing industry ultimately for the consumers that are going to be buying these goods. So you wait in 2022, we're going to be paying a little bit more.
So far, 87% of companies that have reported earnings also they all raise their prices. So you're on to something there, Gene. Thanks a lot, my friend.